bring education to you about the markets. All right, let's advance the slides. A lot of people talk about money they make, but they never talk about risk. And I think risk is one of the most important things that you have to do before you even trade. And so one of the rules I have when I'm trading futures, I have about a $250 risk per trade contract, and that works out real good. You can, if you have a loss, you can usually make that back with the futures market. But I ask you to look at a worst case scenario anytime you trade. Give you a second to read the risk disclaimer. And Morgan, you have to advance the slides. I can't advance the slides. Next. Okay. Uh, Everybody see a picture of our building? That's our building here in Mobile. That's about 10,000 square feet, and I know that we've trained a lot of people outside that building right there. All right, we started our school in 1996, and this is 2013. And I know that when we first started, we didn't even have webinars, and we'd have to be face to face to do it. And there's always that advantage of being face to face. But now with webinars, you can be anywhere on the globe if you can sign in on a computer and you can follow along on the education. I've been trading and investing since early 1980s. Member of the CME Group, largest exchange in the world, and I've been trading the S&P since 1982. I actually traded on day one, so I have been around a while, and I've seen a lot of changes in the financial markets since I started. Uh, Years ago, we used to call our orders in, and now we can just click a mouse and make our trades. Uh, we started school in 1996, and I know that through that process, I think we've learned a lot, and the people we've been associated with has learned a lot. All right, let me tell you about a few of our books. I wrote "Winning the Day Trading Game." It's a book about some of the trials and tribulations of becoming a trader, some of the things I learned, and the different markets and the kind of strategies I used for those markets. That book's in 11 different languages. I think I liked the way the book was done because it was a story form. I told stories of trading, and then the lessons learned from those stories. The second book is The Markets Never Sleep. I'm a real believer in the 24-hour market, and I know that we use the global market all the time at DTI when we're analyzing, interpreting, and executing. And then the last book was Trade to Win. I talked about Trade to Win as being a book to put everything together. Now, here's a couple books that I like. One is Think and Grow Rich, Napoleon Hill. Anybody ever read that one? Okay, and then this book here I want you to pay particular attention to is How to Trade in Stocks, about Jesse Livermore. I believe chapter 12 of this book has the best chapter about stock trading I've ever read. It's chapter 12 inside that second book, How to Trade in Stocks. And then finally, I have Stock Trader's Almanac. I don't know if you've used Stock Trader's Almanac before, but the Stock Trader's Almanac helps you remember some of the trends, some of the seasonality, and some of the things. I'll tell you today about a trade that the uh, Stock Trader's Almanac sort of clued me into, and one that I'm doing right now. Now, here's something new. It's our DTI's mobile app. If you download this app, the nice thing about this app, we will keep you posted throughout the week on maybe some opportunities that might happen. It's totally free. You can download it and you can find out more about our style. And it also has the roadmap software. And this roadmap software will really teach you what you need in analytical software. We developed it, and it's what I use to make my trades. I don't understand why all those people that are losing a lot of money don't use it, because it really does keep you on the right side of the market, the roadmap software. All right, let's talk about the Nasdaq today. The Nasdaq index, I remember when they started it. I remember when they organized it, and I also remember that a lot of people out there use it on the security side through the QQQ. I use it on both the security side and on the futures side, and the Nasdaq to me is one of the best trading vehicles out there. The futures trade 24 hours. There's options associated with it, and you got a lot of opportunities. And the nice thing about it, especially if you follow Nasdaq stocks, can anybody think of what the biggest Nasdaq stock is out there? Yep, absolutely. Apple computer. And I don't know about you, but I have an iPhone. I love it. I think the iPhone is a great product, and it's one that you can keep up with your trading with, especially if you've got our app and you can make trades off of it. This Friday, I was playing golf at the Robert Trent Jones golf course, Magnolia, and I was with Jake Peavy. Jake Peavy is the pitcher for the Boston Red Sox, and one of the things that I was showing him about how you could look at the market, you could find trades, and we actually put out a trade uh, from the golf course using that technology. It's pretty good. All right, typically your tech stocks are part of this. It's a really quick way. If you watch that index, 75% of all these tech stocks will move in the general direction. Last week, if you were watching the Nasdaq futures, you knew about Tuesday or Wednesday that the market was going to be higher. By watching this index as it broke the weekly open and started going higher, and I think it ended up about 1.7% for the week. And here's some of the stocks that make up. A couple of my favorites on here is Apple, Google, Amazon. I think everybody's used to using Amazon, but it's three of my favorites off that top 10 list. Now the NASDAQ futures. It's pretty simple to keep up with, but one contract represents about $67,000 worth of tech stocks. And it's about $20 a point. And if you do five contracts of it, make 5 points, you got 500 bucks. Moves about 25 to 35 points a day, and so it's a good trading vehicle. Opens in the evening, so it's available for you during the Asia trading market. It's available for you during the European markets, and also during the trade day. And one of the neat things about the Nasdaq index, you can see the Nasdaq. You can see the Nasdaq making its move in the morning, and you'll watch it start marking up these Nasdaq stocks with that 75% rule. And that's how you calculate it. $20 times the value. Currently, you're looking at about $33.90 for it, so about 3,400 area, $68,000 in value. Now notice that the Nasdaq during the week went up to about 34.21. That was the peak of the rally. And if you look up there on my software, you can look in the metrics page. The ATR is 35 points. 35 points. All right, let's talk about tape reading. Does anybody know the origination of this strategy as a way to understand the market? Anybody know when they started tape reading? You might remember this a long time ago. If you ever went to a brokerage office, they used to have the tape, okay? And you had the tape that would go across, and you'd watch the stocks trade. I know that when I was first exposed to the market, I had an old line broker that said, "Tom, what's the way the stocks are treated on the tape?" And if you saw a lot of frequency and price movement, it would give you a clue that that stock was moving and it was time to do it. I still use it this day. And what we did at DTI years ago, we put together this roadmap software where it would electronically tape read for us. So if I'm looking at the mini up there, ES is the symbol, or the Nasdaq up there, I can follow along without having to stand in front of the computer. And then of course you can put stocks up there, and the DAX there. You see the DAX is a European index, and it's there. And Netflix is another good program. Livermore. Now here's an individual that you ought to study his trading style. Okay. And if you haven't, I see somebody had some problems downloading that. Why don't you do this? I'll post my email in here. Here's the email. Let me put this in here. I don't know why you can't download it. If you got an iPhone or an Android phone, you should go to the store, and it should be right there as an app. But we'll help you get it downloaded. It's great. All right, here's my email, 99@gmail.com. Okay. Okay. Livermore. What did he do that was so smart? Here's what he did. He followed the path of least resistance. He let the numbers tell him which direction the market's going. I see so many traders today trying to look at indicators and thinking that they're going to be able to mathematically predict what the market's going to do. Have you ever heard the term overbought or oversold? And then all of a sudden it keeps going, and and you go, I thought it was supposed to stop here. I could tell you a story, and I talked about it in my book one time using stochastics years ago. And I was in the treasury bonds, and it was like 95% on the stochastics. And I said, wow, these bonds should come down. Well, anyway, 95 to 96 was about 4 points on the bonds, and I remember losing a bunch of money and thinking to myself, well, that was a big 0.4 there. But anyway, I think you'll do a lot better in the market if you'll study the tape. Livermore had it right. follow the path of least resistance. Instead of thinking bullish or bearish, follow the trend. Now, I see a lot of new traders doing this, always trying to scalp. With the electronic, with the mouse in your hand, it's so easy. It's so easy to, to say, hey, I buy it here and sell it there, and you make 50 bucks or 100 bucks. But I think you'll do a lot better if you have a big picture. And what we do at DTI is we look at the week. And during that week, we have a pretty good estimation of what that trend is going to be, and then we get on side of that trend and make money. I had a guy that one of the guys, he's from Greece. He asked me, Tom, it's been a while since you've gone short. And I said, you're absolutely right. It's been a while since I've gone short. The last time I went short the market was during the government shutdown, about midday, 4 or 5 days into it, for about a 48-hour period. But the rest of the time, I've been looking for long opportunities. And 160 S&P points ago, you can't argue with that, because you sit there and say, well, I've been following that trend. Think of the big trend. Don't worry about when the market's going to top out. Don't worry when it's going to go down. It will go down, but you will have enough indications if you learn the art of tape reading to be prepared. I've never missed a short trade, a good short trade. Since 1987, I missed that one, but since then, I've been pretty well with the trend since all those years, and it's really paid me a lot of money. All right, there's 3 steps to the tape reading: price, time, and movement. Real simple. It's just talk about it in abstract terms. If I said IBM was at 110 on Monday, okay? If it was 110 on Monday, and then was at 111 on Wednesday, and 113 on Thursday, and you connected the dots, okay? If you connected the dots, then your trend would be which direction? Up, correct? And so that's the way you would play IBM if you were watching the tape and the time. It's simple, it's straightforward, and it works. All right, let me show you this. This is an example of the Nasdaq, and if you look at the year open, let's just test this out. If I said to you, take the yearly open and you look at whether we're above it or below it, and you looked at the year open this year and we were trading above it, you can tell that by the monthly open of this month, then the trend would be higher, correct? And so what you would do is look at that yearly open, then you would look at the monthly open, then you would look at the weekly open and the day open, okay? And then if you do that and you find that the market's trading above those, you got an uptrend, take it. And this is always what I tell people when they tell me, hey, Tom, what do you think of this stock? And I will usually ask them, are you making money with it? If they say they're making money with it, I say, I must love it because you're on the right side of it. Think about that from the standpoint. How many people out there, let me ask this question. How many people out there have stocks in their portfolio right now that they're losing money with? I mean, you actually have stocks in your portfolio that you're losing money with. If you have stocks in your portfolio you're losing money, you ought to ask yourself a question. What if you'd taken that same money and put it in stocks that are going up? Pretty simple concept, isn't it? You have to take losses. And by taking those losses, you'll be a lot better off. For example, if you look at Apple this year, Apple opened the year at 555 and then went down to 380 approximately. Well, even if you liked Apple, thought it was a good company like I do, you wouldn't have played it long for the majority of the year. What you would have done was you'd said, wait a second, it's not going up. Apple eventually last year hit 700. So knowing these kind of what I call checkpoints will help you. All right, let's learn something today. Who's heard this term before? Global handshake. All you smart people have heard this one? Well, the global handshake, and there's a little background on it. I had a Globex terminal back in the 90s. Okay? The global the global markets back in the 90s were going full force, and the Chicago Mercantile Exchange created the Globex system. A lot of you that are trading futures today are inside the Globex system that was created in the 90s. I was one of 50 people in the world that had one of these machines. It's called a Globex terminal. That particular terminal was the market, and that was the first stab at the electronic approach. Now, what I did, I developed a way to tell how to connect those trends. In other words, what happened in Asia, how did it connect with Europe? How did what happened in Europe connect with the U.S.? And so I came up with a way to do that by looking at the momentum of each of those markets and then converting that into the S&P 500. And so we came up with this, and we use it every day now, where we look at the market. If we get up early, we have a pretty good indication of where that market's going to be to kick off the day. But you start with the Asian markets, and then you go into your 4 European biggies, the CAC, the DAX, the FTSE, and the Swiss. Take that average handshake. Now, here's something, a little key. See that average handshake at 0.81 right there? Everybody see that? Now, if you knew that above 0.40 was a bullish number, and you knew that at 5 a.m. Friday morning, because this came from Friday morning, then you would play it which way? You'd play it higher, right? And so it led you to higher prices before most people got out of bed. You had that down. And so this is what we do. We follow it on a daily basis. It's a private analysis that we do on the Asian markets through our software. Pretty neat. And it's pretty simple, but it talks about Asia. That's the Hang Seng and the Nikkei. It talks about Europe, the FTSE, the Swiss, the CAC, and the DAX. Now, by doing that, and you take those 4 markets, and you follow those markets, when you wake up in the morning, you got a pretty good handle on whether it's going to be a blockbuster day or just a neutral day by looking at average. The theory behind it is it calculates each of those handoffs to the different markets. I know a lot of people discuss gap trading. Yeah, well, it's a simple average of those indicators based on their opening price, how much they're up or down. It's easy to do by hand. We do it with the computer today. But by using that average, you can determine where the S&P will be trading somewhere around 7 a.m. in the morning, and you know that information. And what you want to do is watch that average, and if that average is growing, you might end up with one of those blockbuster days. Now on our software, you kick under launch, you click global handshake, and bang, you got that number in real time. And it works both ways, go up or down, but the key average is 0.40. If it's positive 0.40, it's bullish. If it's negative 0.40, it's bearish. And you notice what Nick just said? Do you really get gaps anymore with the markets trading 24 hours? No, I really don't believe you do. And I think that if you'll follow the fluidness of these stocks, they're trading all around the globe. And so even when they're closed here, they're trading somewhere, even if it's over the counter. A lot of stories, a lot of things happen over the weekends. Let's take a couple big events that you'll remember. How many people remember the capture of Saddam Hussein? Anybody remember that one? It happened on a Sunday afternoon. And what happened is that was a big news for the market when we captured Saddam. And the markets were marked up in Asia approximately about 2%. I remember that when Europe opened that night, they were only up about 1%, so a little loss of momentum as we got into Europe. When we got to the U.S. market that morning, the U.S. markets were running about 0.5% and declining percentage-wise. By 9 o'clock, the markets turned down, and it was one of the biggest down days at the time that we've had on the capture of Saddam Hussein. But having that knowledge of the global markets gave us early warning what to look for, and then we were able to take advantage on that day. That was a big down day. All right, it's a little bit more I want to teach you this morning. I talked a little bit about, I used the DAX, and the DAX is a market that I would tell you learn about if you're going to be in this trading game. Matter of fact, it's a question I like asking a lot of people that have been trading for a long time. I say, do you trade the DAX? Do you know about the DAX? Do you use the DAX? The DAX is on the Eurex Exchange. And I'm going to give you a website here. It's eurexexchange.com. eurexexchange.com. Morgan, can you type that in there, please? If you'll go to that website, they have a newsletter that's totally free, but it gives you worldwide analysis every day. They'll send it to your computer. You can read about it. It gives you the cliff notes of what's happening, and it's one of the best research tools out there with what's happening around the globe, and it's totally free. It's on eurexexchange.com. And just sign up and they'll send it to you. I worked for the Eurex Exchange for a couple years teaching people about the DAX, and they had the emphasis at the time on teaching high net worth individuals how to trade, so they hired me to teach them about the DAX. And then after about 2 years, they decided they'd focus on institutions. I never left it. Once I traded it, once I started using DAX, I could just, if you see it in live and see what it tells you, it's a great market to compare what's happening here in the U.S. So you focus on the numbers and the time. All right, the DAX. When does it open? Now I'm going to give you Central Time, so you'll have to convert it to your own time. The DAX market opens at 1 a.m. in the morning. 1 a.m. in the morning. So do your conversion whatever time you're in locally, but 1 a.m. So if it opens at 1, you take the opening price, and this is a very simple thing to do, but you add 20 points to that opening price. You subtract 20 points for that opening price. Now, once you do that, it moves out of what I call the noise range of the DAX. And once it moves out of the noise range, you will see the other markets follow it, okay? So let me give you a scenario. We go to the global handshake. The global handshake's at 0.80. Based on the information I gave you, you know that to be what? Up or down? The global handshake's positive above 0.40, that's up, right? And then you go to the DAX, and you see the DAX at, say, plus 30 points above its open. Now you got a couple lines of data pointing higher. Then you go to the Nasdaq, you take its opening, you factor in its noise zone, and now you've got a whole bunch of strong data telling you to play the market long. Absolutely, Dave, you got it. So write this down about the opening price. Now, even if you don't get up at 1 a.m. in the morning, look at it before you trade. Now, throughout the day and night, there's key times with the DAX. 2:30 a.m. is a key time. It's a central time. 3:30 a.m. is a key time. Now, 6 o'clock central time is the biggest time of all. It's the biggest time because we're making a transition from Europe to the U.S. And also, what time is 6 o'clock central time in Germany? What's going on in Germany at 6 o'clock central time here in America? This is where you got to know how times change around the globe. It's lunchtime, absolutely. And so when they come back for lunch, you'll start seeing the market trend starting there about 6 a.m. in the morning. 8:30 is our U.S. opening. 10:30 is when the European cash markets close. 10:30. 12:30 is your midday pivot when you make the transition from U.S. early to U.S. late. Now think about this. 12:30 Central Time is what time in New York? Twelve thirty Central Time, okay, is 1:30 in the afternoon in New York. This is when people out in California are getting fully engaged in the market. So you have a shift of what I call the buying power of America. And that's a key time throughout the day. Then, of course, 2:30 to the close. It's where everybody's finishing up their business for the day. And you can use that DAX pivot number there. Okay. A little bit about our software. Morgan, you going to change the slide? Okay. Now, you can do everything I've told you up to this point without the software, but the software does it for you, and that's why I like it, because it keeps me outside of a computer. But it tracks the market around the globe 24 hours. I can track futures, I can track options, I can track stocks, and I have at a glimpse. That's why I wanted you to download the app where you can see it. That's what it looks like. Let's just analyze what we're looking at here. Let me show you what we're looking at, okay? Let me ask some questions. All right. If you notice up there, I have a category called Seven Sisters. Everybody see where the Seven Sisters is on the quote page? I've got the E-mini, I got the Dow futures, the Nasdaq futures, the DAX futures, I've got gold, I've got treasury bonds, and I've got crude oil, okay? Now, by looking at those markets, okay, by looking at those markets is how I'm going to determine how I'm going to play the market. So let's just take a hypothetical here. Does everybody see that the E-minis at 69 open, 69.50, that's slightly positive. The Dow is 154.04, slightly positive. The Nasdaq is neutral. Now look at the DAX. The DAX opened at 81.81 and is currently at 82.11. Above 20 points of its opening, correct? What way would I most likely play the market on this particular day? Yeah, exactly. And that's how you'd use it. Now, over to the top, we have our ETR line. Our ETR line is going to help on my timing of when I enter and when I don't enter, okay? And so if I look, see the DAX at 82.10 there? And this is how you use it. See the DAX at 82.10? This is the key. The number above that's 82.32. So once the DAX goes above 82.32, I got my trigger to go long. Now the charts are unique. If you look at the charts, they've got all the information about any market you dial in, but on the charts right now, you'll see that magenta colored line. That is the midpoint, meaning if you look at that particular market, it tells you from the high to low, from how it traded throughout the night, where it is, right in the center point, right? So it basically tells you it's set up to go higher. Now, let's drop down to what we have and we call the horse race. It's over on the right-hand side. See the horse race? E-mini, Dow, Nasdaq, DAX, to slide over, come over to that slide right there. See the DAX? Everybody see that? Okay, I had to choose between a U.S. index, okay? If I had to choose between a U.S. index, what index would I buy on that particular day? Exactly. See how you knew that, Chief? It basically takes the relative movement and gets you into the right market that's going to pay you the most money, and it does it at a glance. Okay? Again, DTR page, you can put anything in there, but this is how you do your entries and your exits by watching it move. Look over at the far right, see the Russell? And here's how you could use it to set stops. See the Russell at 1033? You'd place your stop below the 1029. Does everybody see how I did that? I look at the low print for the last 2 hours on the ETR line, and you place your stop below that. Okay? And here's another description of a down move. If you look at this is the Nasdaq index, and I believe this is about 10:30 in the morning. Notice how the DAX, okay, is below the midpoint on this slide. Notice how it's below its opening on this slide, and notice how it's starting to make lows. And there's the horse race itself. Okay. On this one, we'll look at stocks you put in the horse race. Look across the board. You see Apple on this particular day. This might have been from Friday. I'm looking at Apple's down a little bit there in the horse race. Okay. Now, chart readers. Do I have any chart readers in here? Chart readers, you got different formations you look at, right? Head and shoulders. You look at, cup and handles. You look at things about that, okay? And so chart reading, okay, gets a little confusing sometimes. So what I did, I mathematically placed charts in a position that you could do it by numbers. And if you have a higher high, you get a green. So in Netflix's case, we had a higher high here telling you it's green. If your current market is inside the preceding bar, and this is on a daily chart, it's a neutral. And if it's below the previous day, it's negative. And what this does, this helps you stay on the right side of the market, which is your goal, right? Follow the path of least resistance. Okay, seasonals. Anybody use seasonals? Okay, I'm going to tell you. Remember I mentioned that Stock Trader's Almanac? All right, Stock Trader's Almanac, I don't know if you trade gold and silver, but Stock Trader's Almanac has said over the last 20 years, okay, that between the dates of November the 9th and the next 60 days, there's a seasonal bullish trend in gold, right? Okay, so knowing that information, you go into our DTIC and you look at it, look for the date to enter, okay? And so In this case, I'm looking for a reason to get long gold. That's what I'm looking to do. Because number one, I've got a seasonal tendency to go higher, and now I'm waiting for the numbers to justify that seasonal tendency. All right, scholarships. We call it scholarships at our company, okay? This is when we will go through a trade and we will say, okay, Google's going to have earnings. This is what the numbers say. It's higher than its opening for the month. It's higher than its opening for the week. It's higher than its opening for Monday. It's higher than its opening on Tuesday. The odds are Google's going to have good earnings. And the way that you could play that would be able to go into maybe an option, and that option would pay you if Google had good earnings. Now, I don't know if I have anybody in here or not, but that's a true story. We bought Google, and the rest, I think, is sort of history. Went up over $100 by using what I've been talking about today. And most of you could end up making money when you invest 250 bucks and turn it into 4,000. All right, now, how do I prepare? And the reason it's important that you listen is because it's a process. Emotions get in the way of you winning, okay? And the top emotion is fear. So what we do at our company is every Sunday night we have a planning session for the entire week. Inside that week, we look at all the opportunities. We look at seasonals. We look at key numbers. And we lay out the week knowing when we're going to trade. By following that plan, we come into the week prepared. And that's what's called doing your homework, okay? And we know when the opportunity is going to happen during that week. And, this week, for example, I came into the week and I was looking to get long gold, okay? Gold opened this week around 1280. I told you the reason I was looking to get long gold, because seasonally it's strong, but gold's been falling. So what I did is I waited until I got the right setup, okay? And then it was on Tuesday, I ended up going long gold. And I don't know if you followed gold this week. It went down the first day, day and a half, and then it started going up, okay? And now I have a put spread on where I've sold the 65 put on gold, and I bought the 60 put to protect me, and I'll let it expire, and that's how I'll make money using the seasonals, all going back to the Stock Traders Almanac, coming forward to the roadmap, waiting for the setup, and then doing the execution. Iron condors is another strategy we use at DTI. It's where you really, I call it, trying to kick a field goal. I've got one this week that I'll be doing. It's on Apple Computer. But last week I did one on the S&P. The S&P itself, we put this on about Thursday, and we brought in about 350 on this, which meant our risk was $1.50. This was a good one. And then Friday we put on an iron condor going into next week. Okay? But we lay out the plan, then we do it, and then people are able to build their confidence by following and learning how to do this. All right. There's so much, you're not going to, I don't know what your expectations are, but you're not going to learn to trade in 1 week. But I'm hoping today that I got you thinking about the following: tape reading, learn about it, read about it, and use it. I talked about planning your week. Next week could be a great week for you, but first of all, you really have to lay it out, see what news events are out there, see what the seasonal trends are for next week, and look for your opportunities. Whether you trade futures, options, or stocks, you ought to do that before you ever make your trade. That's what you ought to do. Now, if you're new and you don't understand how to do all that, then I'm inviting you in here to watch me do it on Sunday night. And I'll lay it out tomorrow night, 8 o'clock. I'll let you come into my private trading room. You'll get to see it. I'll go through the analysis. I'll tell you where the opportunities are. You can ask questions on whether or not you understand where I came up with that conclusion and what I'm looking for. I'll show you when I'm going to trade, way before I do the trades, where you can prepare for it, okay? And then we'll talk about the numbers for the week, and then every day we update you on those numbers. And that's how we go through it. We do that in our TWT. All right, so last week I did a segment on overcoming fear. So overcoming fear is the first thing. Getting over the fear. You might learn something, or you might be able to execute what you want to do. I know that a lot of new traders have fear of losing, right? So I'm going to talk about that in this tape, and you'll get this as part one. Now, part two of this talks about the T-Buzz, a new service I introduced, but part one is about overcoming fear. Next Saturday at 9 o'clock on November the 25th at 9 o'clock, write that date down, okay? Next Saturday, I will do part two of overcoming fear, okay? That's next Saturday, so you'll get an invitation to that. Next. And then if you want to listen to my first book, Winning the Day Trading Game, we have an audio that you can download and get. All I'm asking you to do, tell me who you are, what you're doing, okay? And then if you do that, next slide, please. If you fill out the roadmap profile, okay, then you'll get an invitation to tomorrow night. It won't cost you a thing to come listen, and you'll get to see how I lay out the week. And I'll include those 3 bonus items, okay? Well, fill out the link below, copy and paste that if you can, fill it out, let me know who you are, and then tomorrow night at 8 o'clock, I'll lay out the week, okay? And it's really not as hard as it seems, but there's a lot to making money in the market. And I don't want to give you any shortcuts here. What I want to tell you is watch it, see for yourself. That's the best way I know to, convince you how good this is. All right, any questions? Al, it's sort of hard for people when the first time they see this. No, it would be 8 o'clock, Roger, 8 o'clock Central Time. And I will tell you, if you can't make it and you fill out this profile, what we'll do, we'll send you a recorded copy of it, and then you can watch it anytime you want to watch it. Okay. Now, and here's what I expect you'll see by the end of the year. You should see new highs in the market, and you will see the market go, if you want to use the S&P as sort of a gauge, you should see the market go between now and about December the 10th, okay, to about 1855. Where's the S&P at right now? And if you're part of our crowd watching it, then you'll be able to watch the money being made. Okay. Well, thank you, Susan. That's a nice thing you said. The best training you ever received. Well, I've been around a long time, and I think we can teach you some stuff. All right. In summary, go to the website eurexchange.com. Get your free download of European analysis. It's totally free. Fill out the app. Get an invitation to tomorrow night. You'll also get an invitation next Saturday, Overcoming Fear Part 2. I'll send you the tape from Overcoming Fear Part 1. And remember, if you're looking at gold right now, I think you ought to look to the upside on gold. Imelda, that is on the S&P 500. That's on the S&P 500. All right, Morgan, thanks for having me today. I guess you have some technical difficulties with where the speakers can't turn the slides. No, it's not overbought. trend is up, and don't, if anybody tries to tell you the trend's down, it's going to cost you money. Market's going higher. And if the market goes higher, when I say the market, the S&P goes higher, you need to be long something. Well, thanks, Samuel. And gold should be trending higher too. All right, thank you, Morgan, for having me. Y'all have a great day. I hope you keep learning. Let me know if you got that European index and you like it.